If we have more of those mechanisms, this thing probably could have been prevented or reduced. It's never 100%. When a guy wants to lie, there's many different ways he could fake the data, give you false information, etc. So I think regulations help, but it's never 100%. Understand that FTX has been gap audited in the US, right? So they somehow fake that and somehow fool the auditors. So just in this particular case, I'm not sure. I think those things, more audits are really good, but I'm not sure if they will prevent this particular case because we never know how this one guy will react to that. When the industry gets bigger, our revenue gets bigger. So we want to save it. We don't want the industry to become smaller. We are in a we're in a very different situation than FTX. But just because one company is mismanaged in an industry doesn't mean every other company is mismanaged. Many consumers are really hurt financially. They have money stuck on FTX, etc. That's going to really shake confidence in trust, credibility in this industry. So now people withdrawing funds from centralized exchanges and the volume will decrease. The regulators all around the world will be scrutinizing us very heavily going forward. And getting new licenses around the world is going to become much harder. So we'll have a lot more education to do. We do need to increase transparency of our businesses significantly. That itself is actually probably a good thing. So this is going to be like a lot of impact. Short-term negative, long-term I actually think many of them are actually going to be positive. So it goes up and down with the Bitcoin price. The Bitcoin price is pretty much an industry index, and being a larger player in the industry, we follow that pretty closely. But that we're okay. So we still run a profitable business today. We're okay. Yeah. For me, I was very surprised by the amount of money that they lost and the amount of customer funds they moved and the state of things there. I mean, before this, I can do some mental mathematics. Based on our revenue, we can and our relative size, and we can estimate their revenue, which is quite small because they charge lower fees. We know most of their public spendings. We know how much they spend on, stadium naming rights, referee jerseys, marketing budgets, etc. We also know how much funds they raised, which is not much, to be honest. And then we also know we kind of have a rough idea, but we never know for sure because they could be doing something different. No, actually, honestly, I do not think it. I still don't think I have that much influence. I think we were the last straw that broke the camel's back. It's not a straw that's really, really strong. This thing has been building up. There's a long chain of events that led to this. People have been losing trust in FTX. Many other people were suspicious of the activities going on. So there was many things that's building up to this thing where we may or may not have been the last trigger. It may be something else. To be honest, even if I didn't make that tweet, this whole thing could still happen. So it's not to say the last straw that have such impact. So it was the buildup of the lack of trust in FTX and people's suspicions. People don't like the way that the DeFi regulations are proposed by them. There's a whole bunch of stuff that built up to it. I may have happened to be the last thing that poked it. We have quite a large number of portfolio products. We have CoinMarketCap. When we acquired CoinMarketCap, they were making $3 million per month in ad revenues. We removed all ads, so there's no banners, no pop-ups, no other projects advertising the ICO on CoinMarketCap. It's a much cleaner experience. We can turn that back on. That'll give us $40 million a year. But we don't need to today. We have Trust Wallet. We can charge a little fee for transactions. We don't need to. So I think today we're still profitable. We're still very healthy. And we want to lower the barrier, the friction for people using crypto tools. We want to get more people to use crypto. So today we don't see the need. But if we do, we have many products. Right now we're single revenue, but we're not single product. We have many products we provide for free, to increase the speed of adoption. But if we want to monetize those, we could. We have a fairly large cash reserves, which we use for acquisitions, investments, and helping other projects. On our day-to-day operations, we're still profitable. So I don't see any need for turning on other revenue matrices. Yeah. We had stronger audit on reserves, on how money is used, how client funds are saved. If we had more of those mechanisms, this thing probably could have been prevented or reduced. It's never 100%. When a guy wants to lie, there's many different ways he could fake the data, give you false information, etc. So I think regulations help, but it's never 100%. Understand that FTX has been gap audited in the US, right? So they somehow fake that and somehow fool the auditors. So just in this particular case, I'm not sure. I think those things, more audits are really good, but I'm not sure if they will prevent this particular case because we never know how this one guy will react to that. It's not set in stone. Different numbers being thrown around. I've seen numbers around $2 billion, etc. I'm not sure if that's enough or that's too much. We like to take a more flexible approach where, let's look at how many projects do need this money and how many good projects we can identify. There may be a lot of projects that that they just want money, but they may not be good enough for us to put funds in. We want to help the strong projects that are just a cash crunch. So we don't know how many they are completely yet. So as time goes on, we need to talk to each of these projects and find out more. Yeah. When the industry gets bigger, our revenue gets bigger. So we want to save it. We don't want the industry to become smaller. When FTX did some deals like Voyager, when we were bidding on Voyager, we saw all the data. FTX owed Voyager $530 million US. We were bidding on Voyager at the same time, but we don't owe Voyager any money. So we don't owe anybody else in the industry any money. So, but we still want to save the good players in the industry so that the negative impacts in the industry is minimized. Consumers are protected, and then consumer confidence returns. Hopefully, the industry will continue to grow. We can just say, look, so some projects, for example, if it's a blockchain development project, so open source system, we may just say we give grants all the time too. So the different projects may have different situations. Consumers, when we're using platforms, especially if you're storing money onto a platform, including a bank, you should ask those questions. So I think those are very valid questions. But in the blockchain world, things can be much more transparent. So we're doing that proof of reserves, which using like Merkle tree, so that people can verify that the assets are included, and we have full reserves. And so so there are many ways to be more transparent. We published our cold wallet addresses. We are now working with multiple regulators all around the world on how to do this audit more transparently and more automatically. But holding crypto on your own also have certain risks. So but we want to be as transparent as possible. The risk is always there. But I think today, Binance, we have 100% reserve for user assets. Operating assets are completely separate. We have a large reserve for that as well. So I think, knock on wood, we are in a we're in a very different situation than FTX. But just because one company is mismanaged in an industry doesn't mean every other company is mismanaged. We're the most licensed platform in the world globally. We have 15 licenses globally. Many countries haven't issued that many licenses. So that's just a state of things today in the world. We are working collaboratively with the FCA. We have ongoing dialogues with them. We would like to get the license, but today we haven't got it yet. But we're not banned. Those things are different. So don't take the news too verbatimly. And in the U.S., we have Binance US has 44 state licenses. 10 of them are granted in the last 12 months. Having a license increases trust. But it's not a 100% thing. It's just that it doesn't, like many licensed entities. Madoff is a licensed fund manager, and they lost 10x more than FTX. So having a license increases trust, but it's not guaranteed. Trust is still built over time with your actions and with your technology. In this industry, we have many technologies that can allow people to verify on their own. So with those technologies being more and more deployed, I think the trust will increase. So trust is not a simple one flip switch. FTX has many licenses in the world, and guess what? They were lying.
Right.
So so I think there's many different aspects to trust, but I think as long as we continue to operate ethically, transparently, and always protect our users. Our users are pretty smart these days. Like information, social media is pretty fast and pretty good. So I think there's no magic solution, and we just got to earn it over time. So there's many topics, but a week ago, people were very focused on loans, stable coins, because that's USD Luna. But now, given FTX, now this focus, the latest focus will be on reserves. But there's many other things we do need to focus on. We may or may not be, as an industry, fully focused on them yet. But people learn from recent events. So that's kind of how we evolve. Yeah, we believe best practices for all of these things, and we actually would like to share many of them to make them industry standards, like how we manage wallets. And I think we have one of the most secure technologies for managing wallets. And we also manage the largest wallet in the world. So we'd like to share some of those best practices. So there's many things we would like to share, but we can only do one thing at a time. Today is proof of reserves for the next couple of weeks. We'll get that done, and then we'll move on to the next one. Yeah. As soon as two people work together, is that centralization or not? That is kind of centralization. And if a company of 2,000 people works together, and they build a platform that many other people like to use, in a free market, there will be some centralization. And so decentralization doesn't mean everyone just are completely isolated and everyone's equal. That's communism. That's different from capitalism. That's different from free market. So this decentralization versus centralization concept should be viewed in a balance. Today, we have centralized entities in both the traditional financial world and also in the also in the crypto world. And tomorrow it's going to be the same thing. Hopefully, over time, the technology will allow more of the tasks to be able to be done by individuals, so that we are moving towards decentralization. Today, if you ask everybody in the world who does not have crypto to hold crypto on their own, they're not technically capable of doing that. I think you and I know that already, right? So if we just force people to go from banks directly to DeFi, most of them will lose their own money because they misplaced it, or they lost their device, or they don't know how to encrypt it, etc. So that's not the best way to grow the industry. So today, more people will be more comfortable with email address, customer support. So this is why centralized entities still exist. So I think it will coexist for a while.